Hey, what's happening, guys? What's going on? YouTube, you guys have tuned into Rules for Rebels. I got a few minutes to kill here while I'm waiting for my pre-workout to kick in, so figure we'd knock out a quick video. I happened to see this story in recent days from the New York Post titled Shake Shack will raise prices again in 2021 to fight inflation. And it looks like this is going to be the fourth time in the past year that Shake Shack has raised prices. Over the course of the past year, you've probably seen the prices of everything going up, from Airbnbs to food to gas to restaurants to consumer staples. We've talked a number of times about shrinkflation, when companies don't raise the price but kind of hide a price raise by giving you less of whatever you're buying. So they'll make the packaging smaller. You'll get less sheets of toilet paper, less sheets of paper towels. And it's been pretty bad for the past year. It's been ramping up in recent weeks and recent months. And it's about to start getting even worse. A lot of companies, as we've talked about before, are planning their price hikes in September, which is just a couple of weeks away at this point. I know Procter and Gamble and Johnson & Johnson are going to be raising prices of a lot of hygiene products, consumer staples, baby products. They're talking about price hikes in the high single-digit ranges, so 7 to 9%, even 10% in some cases. And here is another example of that. Shake Shack will be raising prices again in 2020 to fight inflation. Shake Shack is preparing to hike prices this year more than it usually does in an effort to fend off inflation and protect its bottom line. The New York-based burger chain's chief financial officer, Catherine Fogarty, said on a conference call with analysts last week to discuss the company's second quarter earnings report that customers can expect to pay as much as 3 to 3.5% more for their food. Now, they normally hike prices about 2% a year, so this doesn't sound that bad, right? Like another percent and a half. But you have to factor in the fact that prices have already been raised 3 times this year. I saw another article the other day. If you guys want to see a video about it, let me know. But I think Tyson Chicken was saying that they can't raise prices fast enough to keep up with the prices getting hiked on them. But the price hike is planned for the fourth quarter of the year, Fogarty said, and will touch across a combination of various price tiers and digital pricing initiatives. The planned price hikes are higher than the approximate 2% menu price increase we have historically taken at the end of most calendar years, and will be evaluating the need for further price increases that might go into effect in 2022, depending on how the cost landscape evolves throughout the rest of the year. And I think it's almost certain that it's probably going to be even worse than they're speculating or evaluating at this point. A couple of my clients who I kind of manage websites for and kind of handle their Shopify stores. In certain categories, I do a couple customers in kind of the food and nutrition space, and across some product categories, they've had price hikes from their manufacturers of 30 to 40% on raw ingredients, and so they're having to hike their own prices 30 or 40%. And I actually just got a flurry of emails today that I think 6 or 8 different brands of one of my clients are raising prices on them. I think they have to raise prices later on this week, but they asked me to hold off until Friday and or Monday before the price hikes have to take effect due to MAP pricing. But yeah, it's out of control. Shake Shack has already raised prices 3 times in the last year, according to Eat This Not That. In December, it hiked prices by 2%. In February, the company raised delivery prices through third-party delivery services by 5%, and then another 10% in the spring. The move comes as supply chain hiccups, shortages, and other costs ripple through the economy, squeezing companies' ability to eke out a profit. Along with higher costs of goods, companies, particularly restaurants, now have to pay their workers more in order to attract more experienced employees. And here's something interesting, right? So, for the past year and a half, it's been a crazy year. A lot of people have been out of work. There's been certain businesses that have had outbreaks and had to shut down. And a lot of this quote-unquote inflation has been blamed on hiccups in the supply chain. The government has tried to kind of quell the idea that inflation is out of control. At first, they tried to blame it on supply chain disruptions due to, the beer cough. here we are a year and a half later, and this is still happening. So it's pretty clear that this is not just a supply chain hiccup. The government now is trying to say that inflation is transitory or it's temporary. I think we all know that this isn't temporary. And then with the Delta and the Delta Plus and the Omega and the Delta Phi and whatever else we have coming this fall, it looks like some cities might be locking down. Looks like things might start to get worse again. And then we're going to not only have inflation, but we're actually going to have real supply chain disruptions as well. Hopefully, unemployment running out in September will get some people back into workplaces, and that'll at least help with the labor shortage aspect of it. But it looks like inflation is going to be getting worse and worse and worse as the year progresses, and 2022 looks to be a pretty bad year as well. Fogarty added on the call that we expect wage inflation in the second half of 2021 to be in the high single-digit range. I don't know if I posted this video yet or not, but I had made a video earlier this morning or yesterday talking about how over half of restaurant workers don't plan on going back into the industry. We touched on an article from the Chicago Tribune that kind of talked about this. So not only do we have supply chain hiccups, not only do we have potential business closures here in the fall, not only do we have inflation, but in order to attract enough workers for these businesses to stay open, it looks like they're going to need to continue to increase wages, to offer health care, to offer child care, which is just going to hike prices even further. Several analysts on the call questioned why Shake Shack isn't raising prices higher to improve the company's profit margins even more. Shake Shack CEO Randy Garutti said the company didn't want to go too far too fast. We take our time, we do the right thing. We do not know whether inflationary pressures will be transitory. There comes that word transitory. How long they will last, and there is no reason to take too much at a time when there's a lot of uncertainty in the world, he said. So, as always, would love to hear your thoughts and opinions on these stories, so go ahead and drop a comment in the comment section below. If you enjoyed today's video, give it a thumbs up. If you're not subscribed to the channel, click that subscribe button down below and ring the bell. As always, thanks for watching, and I'll catch you guys on the next video.